All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cowboy. Thank you very much for joining us. If you're just joining us, and it's worth it to be here all day. These markets are pretty tough, right? Pretty incredible. I haven't seen them like this in a long time myself, and I'm old. So why don't we take a look at corn before you get any older, because you want to see these prices, right? These prices are your money, and these markets are your money. March is up 44 cents to 703 and a half. That's not too far from 704 and a quarter, which is the high, right? So that's a good board, but that's got no limit on it, right? We've got the May that's got a limit. 690 and 3/4 is limit, and we've got July 679, which is limit. So we have to keep an eye on those. I'll see. I'm going to do some digging to see if they've traded through that limit synthetically with the options. But we've got D's corn up 31 and a half cents to 611 and a quarter. How about soybeans? What's happening in the soybean market? May is up 66 cents to 1650 and a half. About 3 cents off the high there, 2.5, 3 cents. July is up 62 cents. Look at these numbers. 1635 and a quarter. And then let's take a look at what that new crop's doing, huh? We just checked in on the corn new crop. Let's take a look at soybean new crop. And that is, drum roll please, up 44 and a half to 1459 and a half. That's up over 3% to 3.14%. That's some good going. How about Chicago wheat? What's happening in Chicago with that wheat market there? Boy, 66 and a half cents higher, 926 and a quarter. We've got July up 64 and a quarter cents to 914 and a half. And then moving right along to the Kansas City hard red wheat. What do we have happening there? Boy, we do have some big numbers. 64 and a half cents higher in May. 955 and a half is last. That's about 11 cents from the highs. July up 64 cents. Oh, just ticked down to 62 and 3/4 cents higher to 944. That's not a bad car. How about spring wheat in Minneapolis? May is up 38 cents to 998 and a quarter. July is up 37 and a quarter cents to 991 and 3/4. We did have 10s in front of these May and July contracts earlier in the day. Lastly, let's take a look at cotton. Cotton, that May contract is up 104 points to 119.67, and we still have D's. Look at that out the curve there, still above a penny. So that's pretty good going. All right, let's bring in Todd Horwitz from Bubba Trading. He's joining us via the phone today from Las Vegas. Thanks for being on, Todd. Okay, the floor is yours. You say whatever you like, but it's pretty hairy.
Scott, good morning, and it's great, always great to be with you. Listen, we talked about this Friday that they got crushed on Friday after Thursday the big sell-off. Friday we got pounded. Today they're back. These markets are about as wacko and as nuts as you can get right now. And if you try to outsmart, outguess, or outthink them, you're just making mistakes here. I mean, you have to be hedged, you have to be protected, and you have to be very careful and not get.
And it sounds like we might have just lost him there. Oh, here he is. He's back. Go ahead, Todd.
Yeah, I said the day-to-day movement could drive you crazy. I mean, I think this is very challenging, and I think it's important to be protected, to be hedged, and to be well taken care of, so that if we do get a big down move, you will be covered, and if you get a big up move, you'll be able to benefit from both sides without trying to outguess the market. That's a very big problem that happens too often, based on news, based on what's going on in the world. I mean, who would have thought that we'd be seeing this kind of action today?
How do you counsel your producers into putting things on that will allow them to protect their downside and participate in any rallies?
Well, I tell them we use the options and use 1-by-2 back ratios, so we can, again, we get protection of X. We know exactly where our protection kicks in, and we know that once it goes to the top, we have unlimited upside. So you give a very little bit of a spread to be protected and locking in your costs so that you won't go under in case there's a disaster. And if you get a big rally, we get a big market, which it looks like we could, then of course you're going to benefit from 95% of that up market. So why not take advantage of that? And you can continue to roll up and down your basis, which is again very important for farmers.
And you've got a lot of uptake on that. A lot of folks getting involved. I mean, is it hard to?
Yeah.
I mean, are you finding yourself having to do a lot of schooling, or they know what they're doing?
I have to school it first because, again, obviously in this industry, there's been a lot of, misinformation of how to do things, and too many guys get caught, just like short naked futures as a hedge, which is really not a hedge. You're just really selling your crop. If you're going to short the future, you might as well sell the crop, right?
Right.
So, again, there's just a lot of things that you have to understand about the business. And the first thing to understand is don't let the day-to-day action get to you, because yesterday's sell-off could be today's big rally. And I think that's one thing we have to understand. In these times, we have very turbulent markets right now across everywhere, not just in grains, not just in cattle, not just in the equities. Every single market you look at is out of whack and going up and down like a yo-yo.
All right, Todd, stay right there. We're going to go away and pay some bills. We'll come back and talk livestock with Todd Horowitz in Las Vegas after these messages. Welcome back to the Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy, and every now and again I use that as a cheap segue into looking at these live cattle markets. Let's bring up that live cattle board. Let's look at these markets because these markets are your money. A little bit more heat being applied here to the live cattle. How about April's off $1.47 now, at 140.45, and that is a new low on the lows. We've got $1.60 loss in June, 136.70. And that is real close to one tick off the lows as well. So that board needs a little help. How about feeders? What does that look like? We've got a very strong corn board that's coming through. And these prices, April's off $4.52 to 160.22, which is close to the low again. We've got May off of 460 to 166 even. Again, that's about 20 cents off the lows there. So feeders and live cattle, we're going to have to keep an eye on those. They're struggling a tad. How about lean hogs? This one looked a little bit better, and it still is. How about this? April up 60 cents to 104.27, and that's not too far from the high in April. May is up 85 cents to 108.67. Let's bring back in Todd Horowitz for his take. Todd, what's your take on livestock here?
Scott, unfortunately, I think what you and I have been talking about for about the last 6 weeks is starting to play out, and that is the inflation into the cattle part of the protein complex. You know, they're first of all getting delivery, and the prices are going too high for the retailer, for the customer to buy, and I think it's starting to affect budgets. And I think you're now starting to see not only is corn going higher, which is helping push feeders a little bit faster than fats, but fats are lower as well. And it looks like we're starting to see that rotation down to the next level, which would be the hog market, which will be good until they run out of money for those as well. And this is the inflation problem that we could solve, but of course we don't want to solve it. So we want to continue to, stress out the consumer. So, but again, I think that we're at that point now that inflation is starting to come down to the consumer, and they're stopping buying some of the other things because they have to budget out between gas and other things that they're doing.
Well, I mean, you make a good point there, and I don't want to be too political, but you've got to worry about a little bit this shock to the system we're having with this Ukraine war, I guess, Russia-Ukraine war, you want to call it. That's causing, obviously, those spikes in those prices. I mean, look, I sit here all day on this table. It's all food and fuel going through the roof. And that's only going to add to our inflationary problems already. So, I mean, we're going to have to take care of that somehow. And I just think that also puts that Fed on their back against the wall a little bit. So it'll be an interesting time here. We've got lots to talk about, Ted. That means, Todd, you're going to be back on real soon again. I appreciate you coming on from Las Vegas today. Todd Horowitz from Bubba Trading. We're in Nashville, so I'm going to throw this back over to Jana.